Hey everyone, Charting Man Dan of the Chart Guys checking in on the markets today. It was a fairly slow day, pretty much all of the action happening in the first 30 minutes. And then we ping-ponged around. We had Bullard from the Fed speaking, and that was this candle here where he was saying, inflation's doing what it's supposed to, yada, yada, yada. So market liked that a little bit, but not enough to break resistance. We had a rejection from resistance, pulled back, made another attempt, another double top rejection, and then we rolled over with bears following through into the end of the day. Didn't really break the low of the day at the end of the day, but certainly closed near the low. So on the daily time frame, it is an inside bar bear break, and we're looking at minimal supports in the short term. We've got a few of them: 377.83, 376.42, 374.77. So those three are in play. And of course, for everyone that breaks, the probabilities would increase that this pattern would break bear. Of course, we have to see the bulls break in their favor of these two resistances if we're going to see the 2-week higher low form. And right now, that would require a notable shift towards the bulls after today. Yesterday, we had an inside bar. Okay, we're still hanging around under resistance, but today, obviously now, further away. So bears trying to follow through with a couple key things that they need. Well, they don't need it because, again, the burden of proof is on bulls. Whenever I say burden of proof, that means that's the direction that needs to show up with the volume. That's the direction that we are critical of. And obviously with the trends and the sentiment, it's the bulls that have to prove to us something is changing. So the bears are keeping their control, and they are close to one of our most important sectors, rolling over and joining Team Bear. We've been talking about this for a couple weeks at this point, and it's the healthcare sector. We'll get to that in just a moment. QQQ, so the NASDAQ inside bar bear break. The simple statement is if daily EMA 12 is resistance, then it's a daily bear flag. And we're looking down at the low now is the only support here of 259.73. And of course, if that level breaks, probabilities increase that we're heading towards our fear low, because at that point, we're just looking at 258.46 and 253.65 as the only two support levels. We can say that anything under 270.15 is just a lower high, keeping the bears in control. So it is continuing to be the NASDAQ leading the way down. QQQ divided by SPY is confirming the bear flag, which again, talked about the bulls must see this trend change for the NASDAQ to be leading up. It's not. The NASDAQ is still leading down. Again, another tally in favor of the bears. If we go through these market videos and all the clues and all the sectors that I point out, and we make a list and we tally who's got what going for them, obviously the bears have a lot of tallies, a lot more than the bulls. Another tally for the bears, the dollar is following through for the dollar bulls. Inside bar bull break, this 4-hour tightening range, nice little equilibrium that broke bull, and we are clearly shifting this chart for the first time in 2 months. Getting over daily EMA 12, weekly bounce, clearly underway. Is this our monthly higher low forming? It's too soon to say. We need a daily uptrend to confirm once we top out with the higher low, higher high. That would be the first indication that our monthly higher low is being set. And we're watching for that. But with that dollar strength, we're seeing equities weakness, crypto, a little bit of red, nothing very notable, but metals with weakness as well. We'll look at those in just a moment. Tesla, so we got the 4-hour tightening range that we were talking about yesterday with the low, high, double bottom, lower high, and we are closing back in on that support of 104. Pretty much a second inside bar in a row. Yes, we did break the low of yesterday, but only by 38 cents. So I'm pretty much viewing this as 2 daily inside bars in a row. If the bulls can break 111.75, then we'll be looking at pretty much the high of every day as a key resistance level. But overall, bears in control for the day. Some bounces mixed in there off the low. But on the hourly time frame, we would need to see the bulls confirm an hourly trend change back in their favor if they're going to be able to hold 104 and try and break this tightening 4-hour range in their favor. So there's a lot of names where the bulls' backs are against the wall because they're just barely clinging to some support. NVDA, potential daily bear flag. I got a question recently, and we'll answer it for you all. How many candles can be in a flag, bear flag or bull flag? Doesn't matter. Candles don't matter to me in terms of counting a number. Why? Because we are in control of changing how many candles there are. I can cut in half how many candles there are, 2-day time frame. Well, that looks like a bear flag, even if the daily doesn't to you. It's all about retracement more than the number of candles. I can add candles by going to the 4-hour time frame. Now there's a whole bunch more. Nothing is changing. All we're doing is taking a microscope and we're just zooming in or zooming out. So, if I put an amount of dirt on a little slide in a microscope, I can zoom in and see a bunch of particles. I can zoom out and see few particles. The amount of dirt is not changing. The amount of data and information is not changing. All that is changing is how we are viewing it. So candles, number of candles do not matter. It's a bear flag because of the retracement size. This bounce retracement is extremely minimal from where we came from, not even close to 382 retracement. And so if we were to break 140.96, probabilities would continue to increase for this bear flag, and we would just be looking at the 138.84 recent low. Certainly not a bounce that gives the bulls any kind of confidence. We would have to completely shift this momentum and break that top of the initial bounce. XLV, very close to rolling over today. Still in this sideways range that we've been watching, but again, if XLV confirms the weekly downtrend, it'll be yet another example of our lead bull sector turning into a laggard bear, shaping up monthly consolidation, rejecting from the double top at all-time highs more convincingly. I will be watching for the potential of a monthly high or low, but that will essentially be a notable short-term win for the bears in a sector that has been the leader for Team Bull for months to end last year. UNH, that top bear watch into the start of this new year, is performing wonderfully, increasing bear volume. I didn't get the swing position that I wanted. I have day traded it a few times. It took me a while to get used to the bid and the ask spread and the volume and the liquidity on this $500 stock. Same thing with, Amazon and Google before they split, and CMG. They just trade differently than something that is, a penny between the bid and the ask and extremely liquid. So it takes a little bit of adjusting. But here we are testing for 86.24. We are oversold now on the daily. The hourly got real beat up, little bounce there and dump into the end of the day. So just a big win for the bears. Again, it's going to be earnings that determine things from here, but this was a beautiful setup. And again, it's just the clarity. When you just get that clarity, I can remember like it was yesterday when I first came across this chart, which it was very recently, but trying to find that post just because of how notable it stood out to me in terms of, this is a beautiful chart. It's almost like looking at a work of art. 30 more seconds of looking here at most. I don't know. Anyways, it stood out to me and it was just a post of, this chart looks really good, and I can see a scenario where we break bear here because every 4-month chart that looked like this in 2022 got chopped hard. And so now, are we heading down to 4-month EMA 12 like everything else did? Stay tuned. Financial sector, daily pullback was pretty notable, but a decent little bounce there again. No major red flags here. This is quickly turning into the stronger sector, but we are still watching for a weekly lower high here as well. And again, if SPY is going to roll over to fear lows, XLF needs to confirm a weekly downtrend, XLV much closer to doing so, and QQQ is already bearish. But those three things all hitting fresh consolidation lows at the same time would be a wave of fear that we haven't seen in a few months. IWM, choppy sideways, don't care about it. Someday I'll care about it again, but not now. Biotech sector still holding on well. Inside bar bear break with zero follow through, still remaining within striking distance of this double top. The bulls will have to regain an hourly trend in their favor, but all things considered, XBI, it was down 0.9%. But it is still hanging around. Bears want a convincing move back down within this range. And again, I can't wait for this choppy range to break, because in 2022, LABD was my most profitable ticker. LABU was in my top 8 most profitable tickers. And that was from this, and then I've traded it 5% as much here as I did in the volatile range. So that's where you pump the brakes. You wait for the volatility to return. But for now, sideways. I'm surprised we're still sideways. I thought we would have broken 2 weeks ago, but here we are. Crypto names taking a hit today, not only with the broader market weakness, but SI having a lot of trouble as a crypto stock and hurting anything that's related. Big gap down. They've got exposure to the FTX shenanigans and all that. So MARA, watching for daily consolidation. Again, these weakest names have bounced very nicely the last 4 days, but we don't have any daily uptrends. Aggressive bears are scouting bear swing positions. And it's an inside bar. I missed that top fish. We had a really nice 2-minute equilibrium that broke bull on the morning. I didn't know we were that close to the high of yesterday. I might not have been around. Yeah, I was leaving the computer anyway. But that's a really nice top fish at 4:30 that then rolled over very quickly to a 6% drop. And bears trying for swing positions, looking for daily consolidation there, knowing that the bulls have to confirm the daily uptrend if anything is going to change. And cannabis names as well. CGC, daily inside bar. If it breaks bear tomorrow, our daily lower high is set. And we just look at the low of every day as support. But if the broader market rolls over into weakness and SPY and QQQ break their current lows of this sideways range and XLV breaks bear, we're going to look for these weaker names to fade back to their lows as well. Silver, daily rising wedge confirming. So lowest level in over a week. Weekly consolidation now underway. My target for my swing short is weekly EMA 12. We'll see if the bears can convince me to keep holding. We will have to eventually confirm a daily downtrend with a lower high and lower low, just like the dollar has to confirm a daily uptrend with a higher low and higher high. 2255 is the next most important support level from here, and gold is still way stronger. Gold did start daily consolidation as well, but nowhere near losing the uptrend. EMA 12 still support, so I did get stopped out of gold near the temporary top, but fortunately silver rejected from resistance to keep me in. Miners, decent day as well. So again, the miners are trading more like gold and silver. Silver is diverging from the two more than I've seen it do in a long time. And so we've got gold and the miners on one side and silver on the other side. And it's just a question of, do gold and miners join silver bears, or do silver bears get their act together, form a quick weekly bull flag, and rejoin the gold bulls? It's going to depend on the dollar, in my opinion. Oil. So oil trying to get a little bounce going. 4 hour, we knew the 4 hour bounce was due. It was a 4 hour bear flag confirming with zero follow through into a double top, and now we're just chopping around sideways. So we know clearly that that double top is the most important short-term resistance level, and anything above 72.46 is a higher low. This is a little inverse head and shoulders setup where you've got your left shoulder, your head, and trying to form this right shoulder, but have to break that double top. If that breaks bull, we zoom out and we scout a daily lower high with lots of space for it to form anything under 81.50. The one thing that the bulls had going for them today was the energy sector. But unfortunately for the bulls, the energy sector makes up a very small portion of the S&P 500. Speaking of which, into the new year, there was some rebalancing, and I forget if it was, I think it's SPY decreasing exposure of the tech sector. Not surprising at all with the weakness we saw in 2022 and rebalancing. So that's something to keep an eye on. Essentially, obviously, bulls want to have the stronger sectors have more weight and the weaker sectors have less weight, and enjoyed tech growing and growing and growing over the bull market, and now it's decreasing a bit. So something to keep an eye on just in terms of how SPY is allocating exposure to these different sectors. But the tech sector having less importance, still a ton of importance, but just a bit less than we were in the bull market. Natural gas, no daily bounce underway. So tried to get a bounce going. Did we confirm the 4 hour uptrend? Nope. Little higher low attempt and nope, rollover. All bears. Daily stair step drop, lower high every day for 6 days. Again, the RSI can get so extreme in this name. And after 369, the next level we're looking at is 358. Double bottom down there. And we're potentially heading back. I mean, we're still a little bit of a ways away, but multiple year lows. Natural gas is all bears. All right, that's the checkup for today. Appreciate the likes and follows and subscribes and shares and support. That little thumbs up is the motivation for me to keep making content. The more views, the more content I put out. The less views, I keep putting out the same amount of content. Appreciate you all. Do good things. Everyone, for this chapter, what are we on? 11 something. We're heading over south, so just curled around, pretty much entered the middle of the state, Colorado, from the east, went through Boulder, went through Rocky Mountain National Park, went over into Aspen area, and then curled down into the south into Durango. And this is a little colorful rainbow lizard guy on his way. So I went to Mesa Verde National Park, which is a beautiful spot. And you can see how the landscape has changed from the giant mountains into more of a arid, deserty kind of feel. They've got Great Sand Dunes National Park down in this area of the state as well. But this is the area where they built right into the cliffside walls thousands of years ago. And these tribes are so fascinating with what they did. The soft sandstone, you can see where their handholds were as they would climb in and out of these valleys. And they would use them for, I should say, in and out of these, the side of these cliffs. They used them obviously for protection, and they had some really cool construction that's still around these days. And the petroglyphs are everywhere. And petroglyphs are really everywhere in the southwest part of the country, as well as the middle of the country here in Colorado. And it's really cool to just see, to stand literally where someone stood thousands of years ago and drew something that they felt was important enough to try and have it etched into time. And in a lot of instances, there's these common themes like these swirls. We'll look at some more that I went to in Utah, but there's so many places where you can literally just, drive on a dirt road up to these petroglyphs and check them out with, no fees, no tours, none of that. They're just right there, which exposes them to, graffiti or whatever. But fortunately, some of them are left alone, but a lot of cool different swirl things. We can only speculate as to what they were trying to show. And another cool thing that this tribe of Native Americans did was they pretty much selected seeds, genetic modification in a more natural way, not, splicing genes and stuff, but they would save seeds from certain strains of grass, and they created corn out of a strain of grass. So this is what it looks like in terms of, the valley that they were inside of on the sides of the cliffs. But they would take these strains of grass and save the seeds for the ones that had the biggest, seeds. And then just over thousands of years, they ended up with a crop that had a head of fat corn. And it doesn't look like the corn that we have today, obviously, because that's just using further science to get it to the point where we want it. But a lesser degree, they were using genetic modification and seed selecting to create a crop. So, quickie chapter here. We're going to head on over to Telluride next. I love Telluride. Ended up impromptu stopping at a music festival, The Ride, that they have every year, and met someone through couch surfing. I've never stayed in anybody's place during couch surfing, but got some great tips on volunteering at this music festival and a place on where to camp for free right outside of town. And that was a wonderful, again, just another unexpected stop. It seems like the highlights of my entire trip were all ones that I didn't plan and were all from word of mouth from other people who knew better than I. So we'll head on down there and again, check out Colorado and Utah. Great two states right next to each other. You can make it, a week or two road trip and get a lot of sightseeing. I mean, you could really make it a 2-month road trip if you wanted to, but those two states together, just the fact that they're next to each other and there's so many national parks within a pretty close radius, I would suggest it. So we'll check back in. Hope you have a good rest of your day. See you soon.